fact that this one has gone so far has to mean there's a substantial chance that it's the one for this half century or this century. And the events that take place that infrequently, the worst of them, kill a number of millions of people, and quite possibly as many as 10 million people.
That was our special contributor, Larry Summers, believe it or not, almost 3 months ago now, way back on February 6th on Wall Street Week. And I must say, he's joining us now. Larry, when I heard you say that, I was flabbergasted. And frankly, I was a little dubious, but it turns out you were ahead of your time. You had it called way back on February 6th. So now I have to ask you, what are you worried about now?
David, let me first say I wish I had been wrong in what I said in February. I think these events are going to define the history of the first part of the 21st century. David, I'm more alarmed than I have been at any time in the last 6 weeks, because what I see is that the United States is pursuing a strategy of hope and prayer, not a strategy with a rational foundation. None of the preconditions that were set several weeks ago for opening up have been met. Caseloads have not declined sharply. In fact, they have plateaued, and we're opening up anyway. There's no consistent presidential leadership. Here's the way for your viewers to understand it. People think about a disease like this in terms of a statistic, capital R0. Capital R0 measures if a person gets it, how many other people are going to catch it through contagion. If R0 is greater than 1, it's like 1, 2, 4, 8, 16, and so forth. It explodes. If R0 is less than 1, it's like 1, 1/2, 1/4, and so forth, and the disease contracts. In normal times, what the scientists tell us is that R0 is about 2.5. Today, R0 is perhaps 0.8 or 0.9. That means that if we go back even 20% of the way to normal, we're going to be in a situation where the disease is growing and exploding, unless we have some offset strategy. We don't have any major offset strategy, and we're starting to open up, and it's probably going to be at least 20% of the way back to normal. So we may get a break for several months because of the summer and the warm weather. I'm not sure about that, but it's possible. But we are basically on a strategy where we're not doing anything to prevent substantial recurrent growth of the pandemic. The consequence is going to be large numbers of people are going to die who could have been saved. And because of the pervasive fear that's going to come when the pandemic comes back, we're going to have longer, deeper economic problems than we otherwise would have had. What a responsible country, responsibly led, would have done is it would have recognized that this was a global problem and that the United States needed to lead the world, not to defer to its governors and mayors. It would have recognized that we needed pervasive testing so that people, certainly every health worker, certainly everyone who's working in a nursing home, certainly everyone who's going to be coming into contact with hundreds of people, certainly everyone who's been in contact with someone who has the disease, are tested and tested frequently. And if they have the disease, are quarantined so that we contain the growth of the disease. We would have had a carefully designed strategy around who is going to go out and who is not going to go out based on their perceived vulnerability and the vulnerability of the people they live with. We would have had extensive contact tracing, and we would have recognized, and this is maybe the most important point, that if we're not wasting money trying to stop this, we're not spending enough money. That there are multiple tests that might work. We need to be investing in mass producing all of them. And if there's some waste, it's trivial compared to the $80 to $100 billion a day that this pandemic is costing us. That we could throw money in massive scale at testing, and it wouldn't be more than 2 or 3 days loss from the pandemic. And we're not doing any of that because we don't have any kind of national strategy, because we don't have any kind of national leadership. And when the United States is failing, it means the world's failing.
Right. So, Larry, I understand there's not the strategy now that you want to see, we think we desperately need to have. Do you can see we may be moving toward that strategy? We had a big announcement at the White House that we seem to be ramping up the testing a fair amount, may not be there yet, but getting in the right direction. And on contact tracing, we have real substantial efforts, such as in New York, such as in Massachusetts. It may be the governors, but are we at least moving toward that strategy?
I think we're groping towards the right elements. But the difficulty is that we're throwing everything loose and open and having people go out again and be in connection, be in contact with each other much more rapidly than we're getting any of that going. And frankly, the national strategy has been so inconsistent that nobody can rely that today's commitment to testing will be tomorrow's commitment to testing. But yes, David, you're right that there certainly are some tendency to move in some of the appropriate directions, and that should be applauded. But this is a war, and what we're seeing is not anything like the kind of leadership we expect in a war that we expect that America's had in the past in an existential struggle. And ironically, it's probably going to have big costs both on health and on economics.
Well, let's talk about the economics just for a moment, because we had central banks, both the Federal Reserve and the ECB, step up again this week. At the same time, you had a month in April where the stock market went up more than it has in any month since 1987, in 33 years. Is the market agreeing? Why is it reflecting that rather than what you're talking about? Because you said you're more concerned than you've been in a good long time.
I think the market's reflecting a sense that there's a wall of money being put underneath companies. And for as long as that's going to happen, perhaps their valuations will be pushed up. And I don't think it's connected to economic reality. I think the Fed was absolutely right to think that when it looked like all the financial markets might collapse a month ago, that it needed to be very aggressive. And I strongly supported it at that time. But we are having companies that should be raising equity so that they're stable and they can survive, instead raising debt and instead becoming ever more levered. You saw that in Boeing, which has a million problems ahead of it. It should have been diluting its shareholders and raising equity so that it could survive. Instead, it's issuing junk bonds in the knowledge that the Fed is standing behind it to buy those junk bonds, both directly and indirectly through exchange traded funds. So we are engaged in the temporary expedient of a massive leveraging up of American companies, which is enabling them to look out for their shareholders by not levering by not issuing equity, indeed by dispersing cash through dividends. And there are even some few companies, I suspect, who will be still repurchasing shares. I'm very worried that central bank debt socialism is a temporary expedient, not a long-run growth strategy.
Well, And that's the question, temporary. What you're saying sounds like there's going to be a reckoning. We're going to have to write down a lot of those assets. What will trigger that, in your opinion?
I think when people come and clearly see that wishing things doesn't make them true, and wishing that we can just open up and prosper isn't going to be a self-fulfilling prophecy, as people start to see the health consequences and become more apprehensive, as people look and realize that we can't freeze every job and freeze every business through something that's likely to be quite long-standing.